This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping this show on February the 10th, 2012. Our time is 8:37 Mountain, 10:37 Eastern. Radio show runs AM 640 in Toronto, 630 CHED in Edmonton. Ever miss a radio show? Catch us archived online. The website is hesradio.com. You can also listen to the shows at rarecoloreddiamonds.com. If you'd like to receive our free weekly newsletter, we send it out free of charge every week via email. It's the companion to our radio show. You'll be on the exact same page that Harold and I are on as we do this show. The telephone number, 1-866-623-2002, 1-866-623-2002. And as we start today's show, Thursday, they announced a deal in Greece. And now the EU not really happy with that deal. And Greece is balking. I think ultimately it ends in a Greece default at some point. Greeks will default. And Harold, that's why we say have that insurance policy in your portfolio. It's so important to have hard assets, gold, silver, diamonds. We live in very tumultuous times when it comes to the financial world.
You better believe it, Randy, and well said. I'll tell you, the fundamentals for the markets are just very, very strong for the markets that we're in, the hard asset market. And again, there's a lot of confusion as to what's happening in Europe with the sovereign debt situation, leading off with Greece. One day they have a deal, the next day they don't. And, it appears to me that there's so much trouble and there's so much debt in Europe that they're really not going to be able to find an easy solution to this. And as we just sit back and watch the markets, it's pretty evident to me that the only way that they're going to be able to short-term pay their bills is just to continue to print money. And we all know that when you print money, you're weakening the value of that currency, and that brings on high inflation. In the U.S., when you hear, the Federal Reserve and everybody talking, they're talking about no inflation, but that's literally impossible because with the price of food and the price of oil at $100, you have to have inflation. It wasn't all that long ago that oil was trading at $18, and now $100 seems to be the benchmark price for oil. So as we're taping the show on Friday, gold is trading down slightly on the day. It was down to 1703. It's back up to 1721. The dollar did gain a little bit of strength on what was happening in Greece this morning. And there's rioting going on in Europe and all that type of thing. And again, things will get out of control as more people tend to lose the services that they depend on. But gold right now is trading at 1721, pretty close to the high on the day. Now, there is very heavy resistance at 1750. We'd like to see two closes above 1750, which we had one close last week or this week. So 1750 is an important number. Once we get two closes above the 1750 level, the next level for gold will be that $1,900 price that we saw last year. I'm very confident that we're going to break $1,900 gold this year. In fact, we do predict that we will see $2,200 to $2,500 gold, and that's a sizable move. Don't forget gold. When we first recommended gold at the beginning of the year and did our predictions, gold was down into the 1600s. So now gold's back up to around 1720, testing the 1750 level. A couple closes above that will put us into the $1,800 to $1,900 level. And again, with what's happening in the Middle East and other areas, we do believe we're going to have an explosive year in hard assets. Gold, silver, and diamonds all are going to explode in price. So again, gold has come back strong, looking good at this point. Two closes above 1750 will put us into a very good position. Silver, trading right around, traded at 33.09 this morning. It's back up to 33.78, so near the highs of the day. We'd like to get two closes above $34. Two closes above $34 will put us into a very good position, then $38, then back up to $44 to $50 by the end of the year. But again, with the fundamentals in the market, it would not surprise me to see silver break above that $50 level, and I do see a potential of $60 to $65 silver. Platinum is doing well. Platinum's picking back up steam, but for the first time ever, and this has happened really over the last year, that gold is more expensive than platinum. That has never really happened before, but gold is certainly trading at this point here about $70 above the price of platinum. I do believe the platinum will continue to move higher. We're trading at $1,654 as we're taping the show today. And palladium, we've been a long-term holder of palladium since it was at $170 and is now trading at $703. I do believe we will see palladium prices get back to the $800 to $900 level. The oil market has been volatile, but basically that doesn't surprise me at all. We hit $100 oil this week, and now we're trading right at around the $98 level. We're down almost $2 on the day. Reason for that is that they tend to play around with the markets. When I say they, call it the governments, call it the plunge protection team, whoever it is that watches over these markets. They're very concerned about the price of oil. Obviously, oil moving higher would derail any type of recovery, and that's something that they're very cautious of. But basically, you cannot stop the price of oil because oil is one of the most heavily used commodities in the world, and basically, China is buying oil like it's going out of style. So we do believe that oil will continue to go higher. We'd love to see, two closes above the $100 level. We do believe that we are going to get a retesting of the $150 to $200 level in the oil market, and that could easily happen this year. Even without a war between Israel, the U.S., and Iran, I still believe that we're extremely bullish on oil, and oil could definitely go back up to $140 to $150. However, if there is a war in the Middle East, and I do predict that that is going to happen before this year is over, probably before the first half of the year is over, we could see a spike up in oil very, very quickly. I have recommended on other shows that you do get into the oil market, but not trade the futures market. It's just way too risky. We don't want to take any heavy leverage, and we don't want to take any unnecessary risk, but in your RSP or in your personal account, it would not be a bad idea to own some U.S. oil. USO is the number, is the code for it, and you can buy an exchange-traded fund. And I do think that oil is a very bullish commodity, and it will only get even stronger with the potential of what's happening in the Middle East. Let's just evaluate that situation for a second, because on one hand, Iran talks very, very tough. However, they hate the West. And the fact that the U.S. has brought sanctions against Iran that has dropped their dollar in half in just a couple months since December, you've seen the Iranian currency drop in half. On top of that, because their currency is so weak, you've got inflation there. In fact, inflation is so high that they're equating it to 20% a month. 240% a year with a weak currency and sanctions against you where you can't sell your oil. That's a catastrophic situation for Iran. So one of two things are going to happen. Either Iran's going to put their hands up in the air, wave the white flag and say, we give up, we're going to be good, we're going to destroy all of our nuclear plants and everything, and we're just going to be good. If you believe that that's going to happen, then you want to be short oil, and that's the case. I don't believe that that's what's going to happen. I believe that Iran is getting ready for a war. I believe that they have strategic missiles that are aimed at Israel and other key areas that the U.S. supports in the Middle East. On top of that, again, if they do cut off the Strait of Hormuz, which is definitely a play that they will do, the fact is that will stop the delivery of oil through the Strait of Hormuz into the Persian Gulf, where a large amount of Saudi oil goes through that passage. The fact is that the U.S. has got a major warship sitting in the Strait of Hormuz for the past 2 weeks. However, that will not stop Iran from doing what they need to do. And the fact that they hate the West as much as they do, an article came out in the papers this week that said, Iranians said, and this was from the Ayatollah Khomeini, saying to kill all the Jews and annihilate Israel. So you know that they are going to do something. They are not going to just sit back. So again, you want to be in gold, you want to be in oil. Those are the two areas at this point here in the commodities markets that will benefit from a situation happening in the Middle East. And again, I've followed those situations for a long time, and I've traded oil for over 35 years. I'm long oil myself, and I believe oil is going to $200. So that's a very strong recommendation. And again, we do believe that the oil market, the gold market, the silver market, and the commodity markets are very, very strong. Meanwhile, this week, aside from today that we're taping the show, the Canadian dollar is at par with the U.S. dollar. So we're in excellent shape there. The Canadian dollar is at par with the U.S. dollar. In fact, the U.S. dollar, which is up about 50 points today, about a half a penny, is trading right now at 79 cents. But it was as high as 82 cents just about a couple months ago, and that's when the price of silver was down at $26, and that's when the price of gold was at $15.80. Now we're back up to $17.20 in gold, and we're back up to $34 in silver. So very quietly, we've seen silver go from $26 to $34. An $8 move over the past couple months in silver has been a very, very strong move. So again, everything that we're looking at, the sovereign debt situation in Europe, extremely inflationary. As they print more and more dollars, or euros or whatever they're printing, that weakens their currency and brings on extremely high inflation. On top of that, the countries that do end up going bankrupt, they're going to have to go back to their old currency, which will be at a quarter of what the euro is at this particular point, which means that they will be extremely inflationary. And then in the U.S., there is absolutely no doubt that they are printing money to pay their debts, because there isn't enough money coming in taxes and those type of things in order for the U.S. to get solid again. So the fact is that the U.S. dollar will continue to fall as they print and print and print more money, because it's like anything else. When there's too much corn on the market, the price goes down. When there's too much oil on the market, the price goes down. When there's too many dollars on the market, the price goes down. And there's no doubt in my mind that the U.S. dollar is a doomed currency that will fall not only below the 72.5-cent level, which is a very, very important support level, but once it breaks that, it could tumble all the way down to 50 to 65 cents. And we do anticipate that will happen either this year or next year, but 2012 is going to be one of the most volatile years that we have ever seen in the market. You know, I do say this quite a bit, but it's extremely important. If you don't have insurance on your financial situation, you're going to pay for it, because the fact is that most people earn a X amount of dollars. Let's say you make $50,000 a year as a family, and that's what you live off. You pay your mortgage, you pay your car payments, you pay your food, and you pay your insurance and everything like that, and you put a little bit of money away for savings. But the fact is that as inflation starts to hit, and it costs more to fill your tank, it costs more to heat your home, everything revolves around oil. And if oil goes to $150 to $200, that will bring on massive inflation. Food prices are going to continue to go higher. Just generally, the cost of living is going to go up. So if your income remains the same, but the cost of living goes up, and you do not have investments that are going to compensate for that, you're going to see that your finances are going to dwindle, and they're going to fall off, and your lifestyle is going to fall backwards. There's no reason for that to happen. If you believe in insurance, as most of us do, the fact is that you can buy insurance on this type of financial situation. As far as inflation goes, there are certain markets that do extremely well during times of high inflation. That's been proven in the past, especially back in 79 and 80 when we had a very similar situation to what we have right now. So the fact is, if you do not own gold or silver or diamonds or hard assets in those particular areas, even rare cars are doing well and art are doing well, but these are all hard assets, tangibles that you hold into your hand that you own, not paper assets that are manipulated and, again, can disappear into thin air. So basically, as inflation goes higher and higher, if you don't own oil to compensate for higher oil prices, or you don't own gold or diamonds to compensate for higher inflation, you're going to find that you're going to be like the 90% out there that are going to be affected in a negative way by extremely high inflation. And all we need to do at this point here is shift around assets. I know, some people are afraid to do that. I know some people don't understand how to do it. But the bottom line is, if you're sitting in mutual funds and stocks, you're not in a very strong situation. And my strongest recommendation is to get out of those. My suggestion is to lighten up on your risky market situations. And again, where most people have their money in their RSP sitting in mutual funds and stocks, those are the worst areas you could have your money at this point. And I think most of us realize it, because all you have to do is look at your statement for the last 2, 3, 4 years and realize that you have made absolutely no money in the stock and mutual fund market. My suggestion is to get out of those markets. Put some of your money into cash. Even though you won't make money on cash, you're not going to lose it. And it's all about preservation of capital at this particular point. And it's not a bad idea to have about half of your money sitting in the bank in cash, and have some of it put away and hidden in the house or in the safety deposit box. The other thing is that you definitely want to own gold and silver. Gold and silver are your hedge against inflation. Gold in 1979 and 80 went up all the way to $850. In 1972, it was at $35. What a tremendous move, and that was all based on inflation. Same situation for silver, went from $1.25 all the way up to $52. Well, now we're in a similar situation. 10 years ago, we started buying gold at $250. It's now over $1,700. 10 years ago, we started buying silver, at $4. It's now at $34. 10 years ago, we started buying oil at $18. It's now over $100. Again, you have to buy the markets and invest in the markets that are going to give you the returns that you need in order to compensate for inflation. We're going to talk about diamonds on the second half of the show. That's an explosive market that could basically save your financial life. So again, we want to stick with the same markets as we've been in for the last decade because, again, we're nowhere close to where we want to be. And before this whole thing is over, again, it's difficult to say how high gold can go because we have to reanalyze every time it hits new highs. But there's no doubt in my mind that we're going to see $2,200 to $2,500 gold, and that's probably going to happen this year. And we're going to see $50 to $65 silver, and that will also happen this year. And again, it's very possible that oil will hit $150 to $200, all inflationary situations, Randy.
Well, I was reading today that Ian Telfer, who heads up Gold Corp, saying that the long-term target for gold, in his opinion, $5,000, and he believes this year we could see $2,500. That is a similar scenario to what Rob McEwen, another top-flight mining executive, has said. To invest in precious metals. Get an education from Worldwide Precious Metals as to the ins and outs of investing in this market. This is the only company that Harold recommends you invest with when it comes to precious metals, Worldwide Precious Metals. They're a Canadian company in business for over 10 years. WWPMC.com is their website. The telephone number, 1-866-623-2002. You can get our free weekly newsletter from them. They'll be more than happy to send it out to you via email, free of charge. But let them educate you. I know they have great PowerPoint presentations. All the people there are very knowledgeable on the ins and outs of this market. Get an education. Let them earn your business. When it comes to precious metals, they are the experts. That's who you want to deal with. Worldwide Precious Metals, 1-866-623-2002, WWPMC.com. In our newsletter this week, we have our charts of the week. We have our quotes and quick hits. Also sections on diamonds, gold, silver, quantitative easing, the sovereign debt crisis, the U.S. debt and deficit situation, the Fed, U.S. dollar, jobs, oil and gas, MF Global, real estate, food, and there's a huge section on geopolitical news. In our silver section of the newsletter, this is a great article, and I have to give Eric King credit. He runs a great website. It's called King World News. And he does a lot of great interviews every week. He interviewed John Embry, and John was asked about silver. He says, at Sprott, as you know, we are very bullish on silver. Silver is just biding its time, and it's building a massive base here. There has been a huge short position in the paper market, which has had a huge impact on the price. I think that will pass, and right now, as the physical market has become extremely tight, that is a huge, huge positive. This indicates to me the paper shenanigans that have really plagued the silver market have a finite life now. I will not be surprised at all when silver clears 35 to 37. Then it could sprint right back to the all-time high area. I have no problem with silver moving into the 60s before the next 12 to 18 months passes. So John Embry saying that once we get by 35 to 37, we're off to the races, going to $60 over the next 12 to 18 months. There is another story, and this is the other side of silver. And this is from a legitimate news source. It's from the website Daily Mail. As they say in the UK, co. It's .co.uk. Daily Mail, a reputable website. And I take this very seriously when I tell you about this. My own father passed away due to cancer in 2007. Silver bullet for cancer. The metal can kill some tumors better than chemotherapy with fewer side effects, they report. Silver can kill some cancers as effectively as chemotherapy and with potentially fewer effects, new research claims. Scientists say that the old wives' tales about the precious metal being a silver bullet to beat the big C could be true. The metal already has a wide range of medicinal uses and is a common antiseptic, antibiotic, and means of purifying water in the third world. And a British researcher says that silver compounds are as effective at killing certain cancer cells as a leading chemotherapy drug, but with potentially far fewer side effects. Get our newsletter, read the John Embry article in the silver section, read the Silver Bullet for Cancer. And Harold, we're not in the business here of creating false hope or bringing things up that are from fringe elements, but that is a legitimate story that needs to be reported. And obviously that would have a huge impact for those dealing with cancer. And just goes to show, too, though, another use for silver. And it's a huge positive for those invested in the silver market to see all these different uses. And yet, ultimately, though, it's money and it is an investment. A very exciting story.
You bet. And again, also proves the point as to what you just said. Silver is a dual metal. It's used, obviously, as an investment. However, it is also a very important industrial metal that has so many other usages, and we know that there are shortages of silver. So, the fact is that there's so many people buying physical silver and physical gold right now, and not only investors, but countries are buying them. Obviously, we hear every day pretty well in the news that China is just buying as much as they possibly can. So, again, silver's always been our favorite of the metals. Again, I think it's tremendously undervalued. Silver, realistically at this point here, should be trading somewhere in the range of about $80 to $90, because back in 1979-80, gold hit $8.50, silver hit $52. Now we're looking at $17.50 gold, more than double, and we've only seen silver hit 50, the old highs back in 1980. So silver's got a long, long way to go. I think it's one of the best investments you could possibly make. You want to hold it physically and own it outright. It's a very important market because, again, we could be in this market for another 5 or 6 years. Inflation is coming. You want to own gold and silver primarily because of inflation, but again, it's just a great industrial metal also.
L. Fields, we had the story last week where he projected gold would go to $4,500, and where would that put silver? He said around $158. Well, it's interesting because, and this is from King World News, another interview, Egon von Greyerz says that he believes gold will hit $5,000. He's agreeing with Ian Telfer in 24 months, and silver at $166. He believes we could see a gold to silver ratio at around 30. So keep that in mind, some very bullish projections in precious metals due to all the monetary easing. We're seeing it over in the UK. We're seeing it in the rest of Europe. The United States is doing backdoor quantitative easing, and they're going to keep their interest rates, as we reported a few weeks back, low until 2014, until Bernanke's kicked out of there when we have super hyperinflation. The telephone number to invest in precious metals, 1-866-623-2002. Get an education on the gold, silver, platinum, palladium markets from the experts in Canada on investing in precious metals, worldwide precious metals. Their website, wwpmc.com. The telephone number, 1-866-623-2002. And speak with them. Let them earn your business. Should mention as well, we have some unbelievable stories on diamonds, and we're going to talk about them as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on February 10th, 2012. Our time is 9:03 Mountain, 11:03 Eastern. Our show runs on 630 CHED in Edmonton, AM 640 in Toronto. If you ever miss a radio show, they are archived for you at Harold's website, HESradio.com, HESradio.com. And he has his other website, rarecoloreddiamonds.com, his main website. The shows are on there as well. If you'd like to receive our free weekly newsletter, it's the companion to our radio show. You can speak with Harold, connect with him at 1-800-432-1022 or rarecoloreddiamonds.com. Also, Worldwide Precious Metals. We'll be happy to send it out to you. The website is www.pmc.com. Their telephone number, 1-866-623-2002, and speak with them about investing in precious metals. In our diamond section of the newsletter this week, we always have our featured diamond, and it is a stunning yellow diamond. It is a 0.85 carat radiant cut, fancy, vivid, yellow, internally flawless diamond. And as CNBC was quoted as saying in a story, diamond prices are going up, and they're going to be continuing to go up. Supply is going to dwindle as new diamond deposits become harder to find. And primarily, in this story, you can read, they're talking about white diamonds, which means colored diamonds already very rare are going to become even rarer. Speak with Harold about investing and collecting, starting your own diamond portfolio. Harold is the expert when it comes to investing in diamonds. His diamond website, rarecoloreddiamonds.com, the top rare colored diamond website in the world. Featured diamond of the week. Check it out. Speak with Harold about investing in this diamond. And it was interesting. Yesterday, I sent this story to Harold and his son, Jonathan. A fantastic story from Richard Russell. And he actually, this is on the King World News site again, massive money going into tangibles. Richard Russell says, I just went through the latest Rappaport Jewelry and Diamond magazine, and I was frankly amazed at the record prices paid at auction. Now, obviously, those that listen to our radio show and get our newsletter, they're not surprised. But Richard goes on to say, obviously, big money is investing in valuable tangibles. The price that some of these jewels have gone up for are simply mind-blowing heights. He actually goes through a list here. And it's some of the stuff that we've had in the past, but it bears repeating. The Elizabeth Taylor diamond sold at Christie's December 2011. The estimated price, $2.3 million. It sold for $8.8. The Graf pink 24-karat pink diamond sold at Sotheby's. Estimate $27, sold for $46. A blue 38-karat diamond auction at Christie's. The estimate on it $15 million, sold for $34. A 24-karat pink diamond auction at Sotheby's. Actually, I guess that's a repeat on that one. But, pink diamonds have been setting records. And he says, note, many of these rare jewels are one of a kind, and they have never been put up for auction before. The magazine lists over 30 of these fantastic jewels, with almost all of them selling far above their estimates. The fact is that today there are thousands of millionaires around the world and hundreds of billionaires. These people have enormous buying power, and their greatest problem is protecting their fortunes and their purchasing power. Hoarding great jewels is a way to do it. For instance, compare a $60 million rare one-of-a-kind diamond that weighs less than an ounce with $60 million worth of gold and silver. And the diamond is smaller. Basically you could put it on your finger. We also have another story. This is from last year. I brought it back from last year because I thought it was so important when I saw the Richard Russell story. Henry Bardoujian, CEO of Grabs, he actually says in this story that the ultra-rich are going into the diamond market and they're adding diamonds in their portfolio for profit and protection. Harold, this is something we've said for quite some time. People should have a diamond component in their portfolio if they have the money. It's not right for everyone, but for the vast majority, it's something that everyone should take a real serious look at.
You bet, Randy, and those are great reports. And again, when you get a guy of the caliber of Richard Russell agreeing with us, I think that's pretty outstanding. I've never been more excited about the diamond market than I am right now. In fact, I certainly put my money where my mouth is, because you're going to see coming out very, very soon is the results of everything that I've done over the last year. I bought all the parcels that I could possibly get of all the rough yellow diamonds, and we cut and polished them, and now we're starting to get them out of GIA. GIA stands for the Gemological Institute of America. So what happens is that when the diamonds come out of the ground, they're obviously rough diamonds. They're not cut and polished at that point, and they're sold in parcels. So basically, that's what we buy. We buy parcels of yellow diamonds, blue diamonds, pink diamonds, those type of things. Out of those, very, very few of them turn out to be gem quality diamonds. And as far as I'm concerned, because we only sell flawless yellow diamonds, it's minuscule. Because the amount of flawless yellow diamonds that come out of the mines this last year was so small that there was basically 100 yellow flawless diamonds that were cut and polished last year that were sold, and I sold 80 of them. So 80% of the world's flawless diamonds go through my company. Most of those diamonds are sitting with my clients in Canada. We're just sitting back, letting the markets do their thing, creating a shortage. So basically, I put a lot of money back into the pink and yellow diamond market to do exactly what I just said. Try to corner as much of the market as I possibly could, and obviously a market that small, with the type of clientele that I have worldwide, we can sell these diamonds in the snap of a finger. So basically what you're going to find over the next couple of weeks is by watching our website, rarecoloreddiamonds.com, a lot of these new diamonds are now going to come onto the market. I can let you know right now some of the diamonds that are coming out. There's a 261 fancy vivid yellow internally flawless diamond, an absolutely ridiculous diamond. Vivid is the highest color that you can possibly get, and to get one over a carat is nearly impossible. To get one over 2 carats, forget about it. It's a diamond that's 1 in 25 million. So I've got a 261 fancy vivid yellow internally flawless diamond just coming out of GIA. I just got word of that this week, and it'll be up on the website very soon as we take the videos of them. I've also got a 240 fancy vivid yellow internally flawless diamond coming out. Again, these diamonds are amongst the rarest diamonds and do nothing but go up in value. And I've also got a 151 fancy vivid yellow internally flawless coming out. So those are the 3 vivids. I'm also extremely excited that I've got 5 yellow flawless diamonds over 2 carats between 2 and 2.71. And again, only one diamond in 15 million turns out to be over 2 carats, and hardly any are the yellow flawlesses. So again, I've got some amazing diamonds coming out, and the reason that I'm doing this is we cut and polish, and then we have graded by GIA these amazing flawless yellow diamonds. They go up by at least 25% every year. In times of high inflation, they've gone up 500% in 2 years, in 79 and 80. So a diamond that you can buy for $20,000 could be a $100,000 diamond in the next 5 years. And we saw it happen in 79 and 80 in 2 years. I'm saying 5 years because the Federal Reserve came out and said last week that they're going to keep interest rates at 0 till 2014. So basically that's, 2 years from now. Year 3, 4, and 5 is when you're going to start to see them raising interest rates to reinflate the economy. And that's when you're going to really see these diamonds take on a life of their own. Again, a $20,000 diamond could be a $100,000 diamond within the next 5 years. But the other thing is that these diamonds never, ever go down in value. There's so few of them available, and the ones that we carry and the ones that we cut are 8s, 9s, and 10s out of 10. You see, when the GIA grades a diamond, it could be a fancy vivid yellow, but it could be a very weak fancy vivid yellow, but it falls within their category. Again, we only sell diamonds and purchase diamonds that are 8s, 9s, and 10s out of 10, those very deep, amazing colors. The ones that are the 1, 2, 3s, and 4s, those type of things, are competitors that really don't know the diamond market by. So basically, what you want to do with the world economy, the way it is right now, you definitely want to get into the diamond market. It's the safest asset you can buy. They double in price every 4 years. They respond to inflation as well as gold and silver, but there's no risk to the investment. They never, ever go down in value. Now, again, when Randy said that they're not for everybody, that's true. First of all, the minimum investment is about $18,000. So that, again, not everybody has $18,000 or more to invest in a diamond. The other thing is that it's a longer-term investment. You want to hold these diamonds for 5 to 10 years. 5 years because of inflation, but most of my clients that buy these diamonds, even without the markets the way they are right now, they just put them away for retirement. And you know yourself, with your retirement savings plans, you're not making any money. So basically, to put a diamond away for protection and for security and for your retirement is a very, very smart thing. I've got 2 young grandchildren and another one on the way, and every one of them have yellow flawless diamonds put away. My wife wears yellow flawless diamonds. She wears a 14-karat flawless yellow that Harry Winston made a $40,000 setting for. If we would allow him to put a picture of the diamond ring in his catalog of famous diamonds. Again, there's a ton of money going into this market, but the one thing about the diamond market that was always a negative is that people realize that they're a great asset and they go up in value, but they've been difficult to sell. And basically, if you try to sell it privately or try to sell it through, a jeweler or that, you're not going to get the money that you should be getting for them. That's why we started hsfineauctions.com, which stands for H. Siegel Fine Auctions, which is my company. I built the only online real-time auction for our clients to sell their diamonds. Now, obviously, at this point, the next 5 years, we anticipate making a ton of money in the marketplace. So very few are selling diamonds at this point, but I do have diamonds put away from the last 10 or 15 years that I have been putting up on the auction site. We will be announcing another auction coming up around the end of February. But again, we have been very, very successful in the auction business. This was an auction site that took over 2 years to build. And again, I insisted if I was going to go into the auction business that it had to be live, me selling every single diamond, and that's worked beautifully. We've had 3 auctions so far. The first auction we sold 100% of our products. The next 2 auctions we sold 90% of our products, and that's unheard of because at Christie's and Sotheby's, I believe the number is 50 to 60%, and they're the top auction houses in the world. So again, we built this auction business for our clients, but in the meantime, we're having a lot of fun with it. We've sold the last auction a beautiful kilo coin, the Aztec calendar, that sold for $3,000, and we sold Oprah Winfrey's pink diamond necklace, and that sold at $35,000. So the auction site is starting to work out extremely well. We built it for our clients to resell high-end collectibles. I've never, ever been more excited about the diamond market than I am right now, and what I'm seeing is major shortages coming into diamonds. That's why we put so much money back into the market to buy all these parcels of diamonds, and out of all the money that we put in and all the parcels that we bought, so far, coming up on the site, there's 1, 2, 3, 4, there's about 20 yellow flawless diamonds. That's it. So basically, it's going to be almost on a first-come, first-served basis. What I would also recommend, there's the potential for total financial destruction. As much as I hate to talk like that and even say that, when you hear guys like George Soros, one of the most prolific investors of all time, he's a brilliant, brilliant man and a multi-billionaire. Just so you know, George Soros brought down the Bank of England. He actually shorted the British pound and made $1 billion in one day, when the $1 billion was a lot of money. But basically, he is one of the most prolific investors and a very, very sharp man. And recently he came out and said that he's extremely concerned about the world economy, and we could literally see a total collapse of the economy. If that is true, again, you need some type of insurance to protect yourself. Gold and silver will protect you, and so will a diamond. But a diamond is so important, a colored diamond. It's portable private wealth. If you ever needed to, you could resell it in another country and start all over again if you ever had to do that. It's also, you cannot cross a border with more than $10,000 in gold, stocks, or cash in your pocket, but a diamond, you definitely can. In fact, my wife has gone over borders many, many times wearing her rings, and nobody has ever said boo about it. They've always been portable, transferable wealth, and that's never, ever been more important than it is right now. But in our reality, what we really need to do over the next 5 years is we have an opportunity to make an awful lot of money. In gold and diamonds, we can make a ton of money, and I anticipate that in the next 5 years, we are going to see interest rates skyrocket, just like we did in 79 and 80. And those of you that, were around back in 79 and 80 and buying real estate and that type of thing will realize that interest rates were at 20 to 22% at that point. So again, what follows extremely high inflation is extremely high interest rates, and we believe that's right around the corner. If you play the market correctly, you buy your gold and silver, and those markets do what they're going to do over the next 5 years, and you put away a couple diamonds, you're talking about making a lot of money and then being able to put it back in the bank at 15, 20%, and I do believe there's a very strong chance that that's going to happen. The other thing is, you may want to, while we have some coming in and what we're going to put up next week, you may want to buy multiple diamonds. These yellow flawless diamonds are so important. Number one, they're a great asset, but you may have to barter. You may have to trade. You may have to use them for other situations as currency because they could be sold in Japanese yens, British pounds, any currency. We could hold an auction anywhere in the world, and we will. So we look to make money on the diamond for our clients, and we look to make money on the currency for our clients when possible. The other thing is that competition is competition, and I certainly don't mind competition. In fact, if you look at almost any street corner, there's a Wendy's, a McDonald's, and a Burger King on almost every corner anyways. It's all about competition, and again, I certainly don't shy away from it. However, I've been in the investment business for 35 years, and the people that are copying us have never been in this business before. They're only doing it because we do it. The fact is that my diamonds are 8s, 9s, and 10s, and their diamonds aren't. So basically, I will only resell on my auction site diamonds that I've sold initially. And that's, again, a site that is for our clients to resell their high-end collectibles. So if you are considering the diamond market, price is not the most important thing, because the fact is it's color of the diamond that's the most important thing. And if you're buying a weak color, you're never going to be able to sell it. And that's what the case is. So, again, we will announce in the very near future our next auction, which will be coming on HS Fine Auctions. But look at the site anyway. It's really spectacular. Pay attention to the rarecoloreddiamonds.com over the next week and see all of our phenomenal new yellow diamonds coming out into the market. What I did with yellows, I also did with pinks. I bought up most of Argyle's production, and those are all being cut, polished, and graded as we speak, and all those Argyles are going to come out. So you're going to see on our website the most amount of yellow flawless and Argyle pinks of any dealer on the entire planet. And the reason that I did this is for our clients to have the opportunity to buy these diamonds while the prices are still reasonable. They're going to go up by 25% in September. So if you are going to invest in diamonds, make sure that you do it before that, because, again, you'll be in profits on the diamonds. Also, again, we have HS Fine Auctions to resell your diamonds for you down the road. Argyle pink diamonds are one of the biggest winners that you could ever buy. The Argyle mine in Australia produces 95% of the world's pink diamonds, and it's going to close by 2016 or 2018, which is only 4 to 6 years from now. We anticipate that these pink diamonds will grow up 10 times what they are right now. That's what happened with blues. That's what's going to happen with pinks. So again, if you're in the stock markets, if you're in the mutual fund markets and you're not making any money, if you realize what's happening in the world economy, that inflation is right around the corner and it's going to be devastating, you need to get into gold, silver, and put away some diamonds. And again, it is not a bad idea to pick up 2 or 3. I buy them for my children and grandchildren and just put them away for the future. So all you parents and grandparents out there, if you want to put your kids into a great situation, I'd very strongly recommend you do this while you can. And the reason that we bought out all these parcels is to create a shortage in the market, and it is certainly working. You will see over the next 4 to 5 years, the prices of yellow and pink diamonds will absolutely skyrocket, and that's what we've been doing for our clients.
One thing that's very important, and Harold touched on it, and that is quality. You need to get something when it comes to investing that is of the highest quality investment. Your investment in it may be a little bit more, but in the long run, your return, because of the quality, will be much, much better. The website, rarecoloreddiamonds.com. If you're new to listening to our radio show, go there, take a look around, rarecoloreddiamonds.com. On the site is the Rare Colored Diamonds Historical Value Tracker System. It's the perfect tool for you to view the potential future value of rare colored diamonds based on the current market trends of a particular type of diamond, and you can track the potential future value of colored diamonds there. That is proprietary. Also, when you're on the website, go to the featured diamond section. This week's diamond is a 0.85 carat radiant cut, fancy, vivid, yellow, internally flawless diamond. And please remember, Harold will be willing to do online seminars. So if you have a group of people that would like to be a part of an online seminar, Harold will be more than happy to make that possible. You can speak with him at 1-800-432-1022, 1-800-432-1022, or rarecoloreddiamonds.com, and get the diamond section of the newsletter from Harold. He'll be happy to send you out the whole newsletter and read that story from Richard Russell, massive money going into tangibles, in particular diamonds. Also, Henry Bardoujian of Graps, the CEO. Diamonds, a story we had from last year we're bringing back to you for those that might have missed it. Diamonds becoming a part of the Ultra Riches investment portfolio. Now is the time to be educated by Harold on this market. And Harold, I think it is critical. We're sort of at a tipping point here where people need to get involved, because we could really start to see some very big moves in diamonds in the years to come, not only due to inflation, but lack of diamonds and the lack of the mines. That's something we've talked about for quite some time.
You bet. I'm so excited about the diamond market. You know, I started off as a collector and now a dealer. You know, and a lot of people say to me, well, you know, if the price of diamonds are going to go up so high, why are you selling them? Which is an excellent question. Number one, I'm in the business to sell diamonds. Number two, I have a collection of diamonds that very few can rival. And again, I started off as a collector, but when something like this becomes available, and again, I've been in the business for a long, long time, I've been through the inflationary markets of 79 and 80, not only witnessed what happened in gold and silver, but also witnessed what happened in diamonds. And that's why we brought it to the forefront, because I'm positive we're heading into the same heavy inflationary times, and what better to bring up a private asset like diamonds. And by the way, everybody who's ever received any of our diamonds have always been blown away by them. They are the best of the best. And as Randy said, you know, you always get back what you put in. And when you buy the very, very best, you're only going to do better. So I'm very excited. Again, I've got some diamonds put away that are not on the website that are extreme diamonds. We carry diamonds starting at $18,000 and going up to $35 million. So the fact is, you do not have to spend $1 million to make a lot of money in the diamond market. Again, a $20,000 yellow flawless will do extremely well for you. If you can make 500% on your money, there's very few investments that can do that for you with the safety of the diamond market.
Harold's website, rarecoloreddiamonds.com. Connect with him at 1-800-432-1022 and let him educate you the ins and outs of this very, very rarefied market that he has brought to you, and let him teach you the ins and outs and find out how you can make money, invest, become a collector, have your own diamond portfolio. rarecoloreddiamonds.com, the telephone number 1-800-432-1022. When it comes to educating yourself on precious metals, the company is Worldwide Precious Metals. They're the experts in that field. That's the company Harold recommends you use to learn about investing in gold, silver, platinum, palladium. 1-866-623-2002. Their website is wwpmc.com. We have about 4 minutes left in our show. Two stories I wanted to get to. We spoke about Richard Russell and diamonds. He also spoke about gold. He said, watch gold 2012 is fated to be a monster year. I've been sensing something big and ominous is in the offing. What could it be? A front page article in Sunday's New York Times supplies the answer. Israel will attack Iran with nuclear bombs. Israel must attack this year, for this is the year when Iran will have nuclear capabilities. If Israel attacks, the Mideast will go up in flames. Suggestion dollars and gold. If the dollar collapses, gold will make up for the losses by skyrocketing. The next target for gold to trade into is 1800s, and it's getting close. 2012 is fated to be a monster year. Keep your eyes on the dollar and gold and newspaper headlines. Also, Ben Davies from Hind Capital over in the UK says fair value on gold today is $4,000. The high net worth and retail investor is really starting to accept that gold is here to stay. They are beginning to understand it should be a part of your portfolio. So I'm really constructive over the course of this year. I would not be surprised if 2012 is the year we really start to get the retail momentum into the gold market. So it's not inconceivable, the numbers that I have posted in later years, that we start getting back to what I consider to be fair value relative to the monetary base, which of course is $4,000. And what he's talking about, Harold, and we have about approximately a minute left here, is with all the money that's being printed, top analysts look at all that money and they equate it to how much gold there is, and they do an analysis and they put a price tag on gold. And I know that there are some people like Al Fields and Jim Sinclair who believe we potentially could see 4,500, 5,000. But if they continue to print, even 10 to 12,000. But that's how they get their numbers. They get them by taking a look at all the money that's out there in circulation that's being printed, and they take a look at the finite amount of gold, silver, diamonds, and they come up with these numbers.
You bet. Well, again, You got to, as far as I look at gold, you got to keep on reanalyzing every time it makes a new high type of thing, and there is a mathematical formula that we do use. But as with Richard Russell and with Embry and all the guys, we're extremely bullish. We think 2012 is going to be a very, very strong year, volatile but very strong. And again, the most important thing is not to trade, is to buy and hold at this point here, because again, the markets could go substantially higher, and if you are trading in and out of the market constantly, you're never going to catch the major move. There are going to be days when we're going to see gold up $100 to $200 in a day, and those days are coming very, very soon. We'll see silver up $2, $3, $4 in a day. That's how extreme these markets are going to get. So if you're going to invest in hard assets, my recommendation is to do it now. Get into the gold and silver market, put away a couple diamonds for the family, and we're going to do extremely well.
Thank you, Harold.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
To invest in diamonds, rarecoloreddiamonds.com, telephone number 1-800-432-1022. To invest in precious metals, wwpmc.com, telephone number 1-866-623-2002. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.